What's going on, Trade Pros? This is Mark from Trade Pro Academy, and in this weekend's video, I'm gonna provide you guys with a simple trendline trading strategy. Now, if you're not subscribed to the channel yet, make sure to do that. We're gonna roll the intro clip, and we'll see you guys shortly.
Alright, Trade Pro, so now that you guys have subscribed to the channel and you've checked off that notification bell, let's get into the nitty-gritty of trend lines and how you can use trend lines as a simple trend trading strategy. Now, before we get into how to identify trading ideas using trend lines, let's take a moment for our newer viewers, maybe newer traders, beginner traders, and discuss what a trend line is, what it represents, and how you can actually go about drawing a trend line. So first and foremost, what is a trend line? Well, a trend line is simply a visual tool that we use in technical analysis to help us identify areas of value within a trend. All right, and trend lines, they require market structure. More specifically, they require either higher highs or higher lows in the case of a bullish trend line, or lower lows and lower highs in the case of a bearish trend line. Now, trend lines are considered more an area of interest, more so than an actual law. And what I mean by that is, once you're able to identify trend lines and you're able to plot them visually on your charts, just because you've got them on the chart doesn't mean that it's a good trade idea. You're going to have to qualify that with other qualifiers, but it gives you a good idea of where you can expect or anticipate buying or selling to come in to the market. In our case here, to continue a trend. So we're going to need to see that there is a trend in place already, and then we're going to teach you guys how to identify where there are certain levels or areas that you can potentially find a nice trade opportunity. So for our newer traders, what do I mean by higher highs and higher lows? Well, a simple image here, higher highs and higher lows simply means the market is just breaking prior tops, and when it pulls back, it fails to break back below those prior lows. And all that's showing you is bullish momentum in the markets. On the other hand, for a bear trend, what you will see is you will see lower lows and lower highs. And that is telling you that the sellers are in control of the market, and that anytime there are bulls in the context of this downtrend, they are unable to get it above that prior swing high, which shows again sellers are in control. And so to draw a trend line, what you're going to need is at least 2 swing lows or 2 swing highs in the case of a bearish trend line. So remember, you're going to need at least, at minimum, 2 touches of certain lows and highs before you can apply the trend line. The more touches that you get at a certain level, the stronger that trend line generally is, until it breaks through and causes a reversal. However, in today's video, we're only going to focus on trading with the trend, so we can leave that for another video. Back to the trend lines. Once you've identified that there's swing lows and swing highs, so in this case, in the bullish trend line, you're going to notice that these are the swing lows. So if you've got 2 swing lows, what you can do is you can use a line to connect those swing lows, and that's going to project forward potential levels of value in the context of a bull trend. The opposite would hold true here for the bears. Okay, so if we're going to be drawing a bearish trend line, what you're going to need is you're going to need 2 swing highs at minimum. So that's the requirement. At least 2 swing lows. You can have more, you can have 3 or 4, but 2 is the minimum required to draw a trend line. And again, you're going to take that point of origin and you're going to connect those swing highs together. And what that is showing you is areas of interest, areas of potential value in the case or in the context of a trend. So you can see that this trend is going lower. What you're looking for here is pullbacks to broken lows, to prior broken lows that connect with those trend lines that gives you levels of confluence when there is a number of different factors lining up that are favoring the outcome of the direction of your trade. All right, so in this case, if we're seeing a bear trend, if the market breaks below a previous swing low, retraces up and comes into that level, finds resistance with a trend line there, that just makes the trade idea that much stronger and that much more probable. All right, and so that's just a quick run through on how to draw trend lines in theory. Let's put this into practice by looking at the actual chart. All right, Trade Pro, so what you've got in front of you here is the FTSE 100. This is the 4-hour time frame. So there's a FTSE 100 4-hour time frame. And in this example, I'm going to show you guys how you can apply a trend line and how you can actually use multi-time frame analysis. We're going to use the 4-hour chart and the 1-hour chart to bring together a potential trend trading opportunity on this market based on trend lines, based on market structure, and based on support and resistance. So first and foremost, what kind of trend are we in at the moment? Just looking at it, it seems quite choppy, but if you were to remove all the noise and kind of look at the bigger swings here, what you would notice, all right, what you would notice is that we are actually making lower lows and lower highs. You know, at this point in time, yet we've also made a lower low here, and you can also argue that this is a lower high. And so even though this is not one of those textbook examples that you tend to see where the market just flushes, is just perfectly textbook, this is more realistic. All right, this is more realistic. It's not always going to be textbook. And this is one of the issues with trend lines, is that they tend to be quite subjective. I'm going to show you guys how I personally use trend lines and how you can use them in practice on these markets. So what I like to do is I like to actually use the swing highs and the swing lows. I like to use the wicks. So this is the most obvious. This is the point of origin, where if you consider where we are now to where we come from, all right, we've come all the way from here. So this is a strong level for me. All right, and the next real big level for me is this swing here. The reason it's a stronger level, in my opinion, than say this one is because there wasn't as much time spent in this location as there was here. In this example here, you can see the market kind of rotated for a bit before we got the spill. In this example, we spent, in this case, just about 12 hours, whereas this was around a day or two spent there before the drop, whereas this was only a couple of hours before we actually moved lower. So that makes this level the stronger one for me. And what do we have now? We've got two swing highs. So that means we can draw a trend line. So we'll go from the swing high to this other swing high, and we will connect that just like that. So there is the FTSE 100, and right now what this is showing me is that because we've got these lower highs, we've got some selling pressure present in this market on this time frame, on the 4-hour time frame. All right. Now, the other thing that you can wonder, you can also look at, and you can say, well, if that's the case, why don't you just draw a trend line just like that? Here's the thing, you could. This is still a valid trend line as well, because you've got one swing high, two swing high, three swing high touches. All right. And so whether you're using the top one or this lower one here, what you want to understand is that you don't want to force trend lines. All right. If you're forcing trend lines, if you can have several trend lines in the same level, you're just going to be confusing yourself. And this is why we say it's more kind of a guide than it is an actual law, because it's very subjective by nature. So you can have a trend line here, you can have a trend line here. The one that I like the most is this top one. And the reason for that is because it's the most obvious. If any trader's looking at this, you know, they might see this, but the more obvious level is this top one. And so that's the one that we are going to keep for the purpose of this example. This is telling us, I mean, both of them were telling us the same thing, that there's selling pressure in the market at the moment. The other thing I want you guys to see here is that we're currently at a level of support, all right? Currently at a level of support, and you can kind of see that right here. You can see that we've held excuse me, we've held this support zone around these 57 5,800s rather, several times, once, twice, 3 times, 4 times, 5 times. And now we're starting to get a bit of a push through. Now, granted, this thing can still just hold here and then pop up, but that's what we've got the trend line for, as a level right around these 6,000s, a level where if we do pop up, we can anticipate selling pressure to come in again. All right, and if you're drawing support and resistance levels, again, we can draw that little swing high, and there you've got a level of confluence. So if we get a bounce from this level into here, this is a level you can consider taking a short trade from, because you've got trend line running down, you've got prior structure resistance up there, and you've also got the trend, which is bearish. So there's 3 things that are lining up right there that could make this a strong potential level. Now, play on further with the idea of playing with the trend. What you'd want to see is a continuation of this bearish price action. What is a continuation of bearish price action? Well, if we break through a prior support level, then the sellers are in control. That is selling pressure, right? And that's exactly what we want to see if we're going to continue this bearish trend. And so what you can do here, now that you've identified these levels, is you can drop down to the next lowest time frame, which in this case we're going to use the 1 hour. All right, and on the 1 hour chart, what you will also notice is that you've got some nice, decent swing structure as well. So what you noticed on the 4 hour chart, where we used prior swing highs to connect and make a bear trend line, we can do the same thing here. We can do the same thing using this swing high and using this swing high, because now we've had that 1 rotation lower, and now we've had 2 rotations lower. So we can actually connect these highs and give us a short-term trend line as well. So let's connect these 2 together and just pull this across, because we want to get it going under the support. All right, we want to see under the support level, if we can break through that, where we'd be looking for potential levels of value in this bear trend. All right, and so what you're seeing right now is we've had a couple of bounces, didn't get all the way back up, but what you can see is that we've broken through. Now what we are looking for is we're looking for a move lower to show that the bears are in solid control, say into these 5680s or so. And then what you would want to see on the way back up is you would want to see somewhat of the same happen. You would want to see the market come in, and we want to see the market tag this trend line and then fail. And if we can see the market tag this trend line and then fail, now we will have confluence again for a potential short trade that we can look to get into for a continuation down into those lows and even further. All right, and so what that would look like essentially is if you just pay a quick look over to the market right here in this price action. All right, what you'll notice is that the market kind of, it went counter trend. All right, you can see this was a counter trend pullback, and once we got that solid breakdown below it right here, the market continued, and we'd effectively be looking for something similar coming into this overarching trend line. All right, we would want to see price break this structure lower, break that support structure, and then we'd want to start seeing it climb, a little counter trend climb, come back in to tag this level, and then if we see a breakdown back below that level with a nice close, at that point you are now looking to take a potential trade for the downside. And so what that would look like would be something like this. If we get a big bearish rejection, close below that counter trend line, you want to put your stops above those highs that caused that rejection, and you would want to target the downside. And so that is basically how you can use trend lines to frame a idea to take a trade alongside the trend with high confluence, high probability, and low risk. Now, this example was a bearish example. You would essentially follow the same steps, just vice versa for a bullish trend opportunity. You'd want to find 2 swing lows that you can connect, and then you'd want to drop onto the intraday 1 hour time frame. See if you can also find a bullish trend line, and then wait for price action to break a prior resistance structure, pull back into that trend line for an opportunity to jump on that trend.
All right, Trade Pro. So I hope that you guys enjoyed that little introductory walkthrough into the trend line trading strategy. If you did, please let us know by smashing that like button. In addition to that, if you guys can drop down in the comments below what you'd want to see from us next, that's going to help us cook up some new content for you guys. Until next time, good luck and good trading. Take care.
Hello, and thank you for watching this video. I want to take a moment to invite you to an exclusive online trading masterclass. In this event, you're going to learn 3 key things to help take your trading to the next level. Number 1, we're going to teach you a complete price action strategy used by professional traders on a daily basis, plus give you the checklist so you know how to check off each step to qualify the opportunities. Number 2, we're going to teach you how to use advanced order flow analytics to help you qualify high probability, low risk trade setups on a daily basis. Plus, we're going to teach you how to use that order flow to disqualify the trades that you're used to taking that end up being stopped out. Number 3, we're going to show you how you can apply all of this information with a small account, because you can start small and scale up. In fact, that's the only way to start, and a lot of our traders are doing it in our community on a daily basis. This is an exclusive offer you can get online only at this event. I look forward to seeing you at this masterclass and teaching you these 3 secrets of highly profitable day trading. Take care and have a great day.